Hey guys, so in this video, let's discuss Manila condo prices to fall by 15%. This is under the disclosure that Colliers posted just a few hours ago that they're forecasting prices to drop by 15%. So please remember this, that the reason why I'm posting this is not really to cause you to panic or to fear. And if you are a stock market investor that you're eyeing property development companies from Ali, Vista Land, Megaworld, Robinsons, uh, SM Prime, DMW, CLI, CPG, Rock, and all of the other property development companies out there. This gives you also perspective because at the end of the day, knowing is winning half of the battle already. Having the right information, having different kinds of analysis will allow you to make right decisions, or at least right decisions that fit your financial profile and your trading plan. This goes also for those who have cash and want to buy condos, and this also goes to people who bought condos already who might have bought them at a higher price. So at least you have a battle plan, but this is in no way a video pushing you to panic, because I've been saying this over and over again that if you panic, that's when you lose. If you panic, that's when you give up the upper hand. The best way for you to make money in investing, the best way for you to make money when it goes to the real estate and into property stocks or in the stock market in general, is to remove as much emotions as possible. The way for you to be able to trade with confidence is that as you remove emotions in your trading and investing, it allows you know to be able to holistically go with what your strategy is. So condo prices may fall, but I've been saying this already, before we go to the slides, that uh, you can expect it, given that we are sitting in something that's unprecedented. We are living in times where the economy is literally, in most parts, shut down. So, meaning there will be people who won't have enough spending power over the next few months to be able to either pay for their loans or to be able to buy houses. Because at the end of the day, if you're scared for liquidity, or you're scared about your income, you're scared about cash that's coming in, some people might defer buying houses. Or for people who have been investing in condos, another context is they'll try to keep cash first and they'll try to invest and buy more later on as they see things neutralize and start to normalize. Please remember also that investors don't like uncertainty. It's better that they know what the item is, whether positive or negative. But uncertainty is what investors don't like. That's why there's a flight to safety, flight to cash, because of that uncertainty as well. So if you guys are excited to talk more about this, comment below. I'm excited, and let's get into it. But before that, super appreciated, guys. As you all know, we are past the 103,000 mark already. If you find great value into this channel, super appreciate it if you could subscribe and like. I'm Marvin Gurm. I'm a stock market trader and investor. I've been doing this for more than a decade now, and the goal of this channel really is just to educate you and give you as much information so you get to trade the markets with conviction. And particularly for this, we're going to talk about condos, property investing, so that at least you have an inkling. If you are a stock investor that's prioritizing property development stocks, you know what to do. And over the past few weeks during the lockdown, I started a new channel called Marvin Gurmo Podcast. It's roughly new. It's around 1,700 subscribers already. The goal of this naman is I open this to teach people who want to learn more investments above and beyond the stock market. So this is where our entrepreneurship, real estate, insurance, blockchain, Bitcoin videos will also come out. So the link to this description, or to this channel, is in the description below. Super appreciate it if you could support it too and click the link so you get to be updated also on the other pieces of content that I make. Now, let's continue. So there was a quote by Joey Bondoc of Colliers. He said this: "The Philippine economy and property market are facing a tremendous challenge." And as you all know, I've made so many videos about this. The challenge is basically because of the shutdown. Everything is closed. Since everything is closed, revenue is not coming in, sales are not coming in. Hence, those businesses that have been uh, leasing out, renting out space, they are not earning money. Hence, it places a threat on their capability to earn. But that being said, also, those business owners and people working for them, they most likely also have their incomes cut, or it might not be as rosy. Those who've been earning commissions are not earning also. Hence, those who would have bought houses might not be buying houses, or those who are buying condos or who have bought already face a threat that they may not be able to pay the amortization for it. So please remember, prior to the lockdown, prior to the coronavirus, the Philippines and the economy was zooming massively. The only threat that we had last year was the trade war between China and U.S. markets. Now we're facing something that's real, that because of the lockdown, a lot of the office spaces in Manila are basically vacant. And I'm gonna have another video on this maybe tomorrow or 2 days from now with Miko Baranda of Lichu uh, Property Consultants, and he mentioned a couple of things specific to the drivers, no, to our property market, the BPO industry and the Pogo industry as well. So we're gonna talk specifically about that in the next videos. But that being said, because of what's happening right now, offices are literally empty. A lot of the non-essential businesses are also closed, and the ones that are getting the brunt of all of this. And if the 2008 crisis was a crisis on large financial institutions, today the biggest threat to the economy are SMEs. You will see a lot of, and just to be honest and just to be practical and realistic, you will see a lot of SMEs over the next few months. Some of them may not survive. A lot of them may have a hard time also just to recoup. Please remember, a lot of these companies did not project this. So a lot of them were either aggressive in their expansion, leaving shorter amounts of cash, projecting that things would be so good this year. Because this is what's so interesting about crashes, no, about uh, when things go bad. Things would normally go bad just right before things are good. Then it turns for the worse. And that's what's so interesting about it. It happens when people see it least coming. Now, some SMEs won't survive this, meaning those SMEs were also tenants. And then some SMEs will have a hard time. So probably they won't be able also to pay rent, or there will be some haggling for rent, or there will be some deferment of the payment. So just to be realistic, that's how it will impact the office and business side of it. But above and beyond that, if you analyze it further and you take a deep dive into it, again, a lot of people that work on those offices also have to pay for their houses. So again, there's an expectation that there might not be any growth. And to put this into perspective, Colliers also made this during the 2008 crash. Condominium prices in the Philippines a year after dropped to 1.5% in 2009. So this is a bit more extreme, though, that condo prices will fall to 15%, given also that this is a different type of crisis, given that this is a different type of crash that we're seeing. And if you put everything into context also, I think one of the reasons why condominium prices dropped 1.5% in 2009 was because the crisis really wasn't in the Philippines. The crisis was in the US. The crisis was uh, pretty much in Northern America and Europe. And because demand was still strong in the Philippines, that we're a consumption driven economy, since demand is very strong here, the domestic economy kept us alive. And if you've been watching all of my previous videos, I've been mentioning that OFW remittances have been very, 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 very strong even in 2009. So from 2008 to 2009, remittances increased, even though the condominium prices dropped to 1.5%. Now, a lot of analysts are also projecting that because of what's happening because of the coronavirus, they're pegging and estimating that remittances may drop to around 20%. So that's a lot. So if we have around 30 billion uh, US dollars in terms of remittances, that dropping to 24 billion is a lot of money. But context also, 24 billion was where we were, I think, 5 6 years ago, and we were okay, but that 6 billion US dollars is a lot of money that could have gone around. Don't get me wrong, 24 billion US dollars is still a lot of money, but that 6 billion that could have been used here in the domestic economy, either for purchases of condos or domestic or just basic plain consumption by Filipinos, that's something that might not be there. And what's so evident is if Filipinos lose their jobs, and I said this in different videos, one of the biggest threats to that also is that the Middle East. Please remember, oil prices have dropped massively, and the biggest oil producers also are in the Middle East, uh, Saudi, Kuwait, etc. They're the ones that are right smack in the middle of this. So a lot of Filipinos are there. If a lot of Filipinos get sent home, a lot of Filipinos lose their jobs. Then it critically impacts the buying of condos. It critically impacts how people would spend for their condos. Either people who bought may not able to finish their payments, or people who should have bought may not be able to buy. Hence, tapering growth. And if growth is tapered, prices for condominiums might not. Those who bought those no one would want to buy something that's higher, and it's a supply and demand principle. If no one is buying it higher, the next tendency is to bring prices lower for people to be able to buy. And here's the thing, Colliers predicts that there will be a 5.5% decline in rent for 2020, given that, of course, that there will be uh, if there are people who if there are people who may need to somehow, no, if you analyze it this way, again, it's always about supply and demand. Lesser demand for rental space, lesser demand for this particular unit. People who have the supply will have to lower their prices so that it would be acceptable for people who would want to get in. Uh, that being said, also, if you watched my videos for Ayala, a lot of these property development companies are stopping new developments so that there won't be a surplus of supply. There won't be a glut. There won't be as much supply available, because that's where bubbles. That's where it becomes scary, and that's where bubbles sort of pick up now when there's so much supply compared to the actual demand, and then massively people will just boom bring prices lower. And I think cutting supply is a good move, because cutting the creation of new projects is a good move because it lessens the supply. And it's good that they're trying to be as conservative as possible in order to protect also the real estate market. So Colliers predicts 5.5% decline, and there will be an increase in vacancy rate from 11% to 15%. And 15% was 20, that 11% was 2019. Because of what's happening right now, there will be an increase in the vacancy rate to around 15%. And if you watched all of our property investing videos, this is where how you make your units more condos friendly for more renters or for people to buy it will play into effect. And this is where also if you did not stretch yourself too much, if you're not overly leveraged at this point in time and you have a lot of cash, you will be protected as well. So it's very, very important that since there will be an increase in vacancy, if you are a unit owner and you're listening to this, I hope that you have enough cash uh, to be able to stay afloat under these conditions, that you have enough cash also that you get to pay for your loans while all of this is happening. But this is an expectation that there will be a shift and change in terms of vacancy. And here's the thing, this goes also to what I said, that growth will be stunted this year. There will be 11,000 units that will be completed this year. Last year they made 14,000 units, and if you notice it, normally the progression is there's more built per year, but this year we're digressing. This is them already showing that we don't want a lot of excess supply in the market so that prices won't go down drastically. Now, that being said, I want to point this out. No, Colliers is expecting that 5.5% decline in rent, increase in vacancy from 11% to 15%, and they're expecting condo prices to fall by 15%. If you look at it from a perspective of the 2008 crash, condominiums dropped only 1.5%. But I want to show you property stocks, and please do note this. Number one, Ayala Land, from a 52-week range, no, it hit 53.85. It swung to 19.44. Today, it's at 31 pesos. I'm gonna get into something, but I'm gonna show you more. SM Prime highest was 43.35. 52 week range for it was around 19. Price today is 30.95. Robinson's Land 52-week range 29. Lowest is 10. Today's price is 14. Vista Land 7.88. 3 pesos. Price today 3.93. Megaworld 6.54. 1.86. Price today 2.59. Now, here's the clincher. Here's the punchline in all of this. If you look at all of these stocks that I'm showing you, from the highest point to where it is, from to the lowest that it has ever been, majority of the stocks have crashed significantly, much higher, much lower than this and this. 15%, 5% is no match to the drop that happened to Ayala Land from 53 to 19, from SM from 43 to 19, from RLC from 29 to 10, from Vista Land from 7.88 to 3, from 6.54 to 1.86, or even if you look at its current price, from 53.85 to 31, from 43.35 to 30.95, from 29.8 to 14.10, from 7.88 to 3.93, and from 6.54 to 2.59. If you look at all of this and put it into perspective, the drops are massively bigger than what is shifting in terms of real property prices. So the reason why I'm saying that is you have to realize that the stock market is a forward-looking market. People anticipate, and sometimes when things are bad, things are sad, things are gloomy, the market drops faster. The market valuations are thrown aside, and emotions uh, take take precedence, and people sell. When massive amounts of people sell, massive amounts of people want to be liquid, prices drop massively. That's why people try to anticipate, and that's why the drop has been much more than what will actually happen in the real estate side of it. Again, the progression is just 15% vacancy, uh, 5.5% decline in rent, and Manila prices to fall at 15%. So please do note that the drop has been much bigger. And if this projection is just for Manila, think about it. Some of the developers that I've posted here from Ayala Land, Megaworld, Robinsons, SM Prime, a lot of them have their developments outside Metro Manila. So let's just assume that the hit will just be in Metro Manila, or the decline will be in Metro Manila. The ones that have properties in areas where there won't be a decline will somehow get hedged. I'm not saying that they're going to be protected fully, but I'm saying that they're not as affected for those that have a diversified set of portfolio outside Metro Manila. But again, please do note that this is something that is expected already. I've been saying this over and over. We had so many economists, business people on the show, and I've said also my thoughts that, to be honest, it's not as uh, rosy as what everyone else wants it to be. But cycles like this happen. This happens. This is part of the game. This is how crashes go. The recessions and downturns in the economy, they all come in different shapes and sizes. But it's not a question whether they happen. It's a question on what we do in the midst of all of this. Now, I've shown you the numbers, I've shown you the details, I've compared what could possibly happen in the property market, and I'm showing you also what has already happened in the stock market. That being said, are you learning from all of this? I hope you are. I hope this gave you enough insight. If you guys have any other question on top of this, appreciate it if you could put it in the comment section, and we'll try to make videos on top of that. Tomorrow or in the next few days, again, we have Miko Baranda from Lechu Property Specialist, who will give his insight on the POGO and BPO market, and how the office spaces would be affected, or the property rental spaces would also be affected on top of all of this. Stay tuned also for the next video after this, also by today. I hope you guys enjoyed my video with Paulo Tibig. The video before this, he also mentioned the sectors that are mostly affected. If you guys learned a lot from this video, super appreciated if you could press like, press a thumbs up, so you get updated every time, so that YouTube shows this video more to more and more and more and more and more and more people in the industry, or more and more Filipinos get updated on what's happening. So there, guys. Appreciate it if you could subscribe. I have 5 books. They're all on Shopee. The links for the Shopee books are just in the description. You just have to click them. Then Shopee will take care of all of it. If you are in an area that's not Shopee, or Shopee does not deliver to, there's a link beside it where you can go to the online store and then they'll send it to you as well. For those who want to learn about all of this that I'm talking about, if you think this is so foreign to you, you don't know the basics of the market, I have Stock Market for Everyone with Chinkitan. It's an online course. You can click that also and you can attend that if you want to learn the stock market in Tagalog. Then I also have another course called Make Money, Grow Money. It's with Sean C. It's the basics of investing, entrepreneurship, in the stock market. If you want to enroll, you can join us there too. And again, I say it over and over. If you want to get updated on what's happening in the stock market, subscribe to my channel. If you want to get updated on business, investing, entrepreneurship, and everything else in between, success, how to be rich, how to make money, this is my second channel. It's called Marvin Gurmo Podcast. The link is in the description below. I hope you guys got a lot. We're closing the 21-minute mark. Comment below if you guys stayed. I hope that this is something that gave you enough insight for you to be able to trade the markets with confidence. So that's it for now. This is Marvin Gurmo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. God bless you. Till our next video.